He's the founding managing partner of Tanto Capital Partners, live for us in New York this morning. Ozan, always great to see you. Thanks for being here. So first, with this new deal we've seen being signed between the UAE and Italy, ADQ and Eni signing this critical minerals partnership, all part of this UAE pledge to invest about $40 billion into Italy's economy. You have some thoughts on Europe's push for stronger ties with the Gulf?
Absolutely. And not just because Europe is going to come under significant pressure on both growth, innovation, but funding on the back of the change in this old world order where US used to provide a security, blanket security guarantee, but also because it just makes good sense. The UAE, Abu Dhabi, has all the interest in being able to find the right partners in Europe to be able to explore the renewable energy, the data centers, and critical minerals and rare earth minerals exploration with credible partners. Italy has a great track record in this field, and Meloni and the government will be looking at diversifying their sources of funding, especially on the back of what will most likely be a significant rise in the cost of borrowing for European countries, because they will have to spend a lot more money of their GDP, a lot more money on borrowing in the capital markets then.
Indeed, and I think you make a great point here, because as we see the European political and security environment continuing to remain uncertain, also low to flat growth across the continent, then it makes sense for these European countries to be tapping into the growth markets, including the UAE and Saudi Arabia, which is something that Italy is executing well on. So when you think about this through the lens of a private investor, what are the opportunities to invest right now when you look at this dynamic? I know you're looking specifically at sectors like European security, defense, tech, energy infrastructure as well. Just unpack the opportunity for the private investor in this environment.
Absolutely. Now, if you take a European lens into this, again, given that we're going to be facing a much more challenging ecosystem for investors in European sectors, what I would say is that defense sector, energy infrastructure, and infrastructure of AI are well protected from the onslaught of change that Europe is going to have to deal with. And especially around the defense sector, we see a lot of opportunities, because as Europe looks to gear up to spend close to 5% of GDP at some stage to potentially create a European army, with Poland taking over the EU presidency, potentially create this Europe rearmament bank idea, which is modeled similar to EBRD, which will start with €100 billion starting check, if you will. There is going to be a lot of demand for security and defense companies in the region. Now, combine this with the fact that it's undeniable that the future lies in AI, future lies in innovation. But all of that would need a significant push to grow the energy infrastructure around AI, around data centers. So this one area is one that we need to watch out for, because the rest of the markets, especially in EU, they're going to find it quite challenging then to keep up with the pace of innovation and growth in US and China.
Indeed. Can I ask you as well then, of course, this is not a risk-free trade, even though we see these new trade and business ties developing between Europe and the Gulf. On the continent, there's, of course, concerns about regulation, which has really become a key talking point under Trump 2.0. And the other issue are these looming Trump tariffs as well. So what does that mean for European companies, European firms looking to compete with the US and elsewhere? Are we going to see, you know, perhaps less of an investment case in Europe as a result of what we're seeing coming out of the White House right now?
Absolutely. And sometimes we have this discussion and debate amongst our investment committee saying, well, you know, Europe is not European companies and vice versa. But the problem is European companies are burdened by European regulation. And at a time where the US is looking to deregulate and focus perhaps more inwards, and Trump tariffs becoming the reality of trade across the world, I find it very difficult to find a good investment thesis in Europe, except for the sectors that I described. And especially within financial services, I don't see how European banks are going to find it easy to compete with their US counterparts. Now, having said all of this, and despite of the fact that Europe needs to spend a significant amount of capital, as the Draghi report said, close to 800 billion euros on being able to retain its position between US and China, what Europe has then is not a money problem. What Europe has is a politics and policy problem. And I think we're going to witness a real push in Europe, the European Union in particular, looking to level up. I don't think it's going to be easy, and I think this is going to pose a significant challenge on European companies over the next 2 to 3 years.
Right, and it's going to be so interesting to watch because you really do get the sense that that shift is only just now beginning. Ozan, wish we had more time. We'll have to leave it there, but thanks so much for staying up late for us tonight in New York. That is Ozan Ozkaral there of Tanto Capital Partners with the latest on the investment outlook.